You're listening to a production of the National Media Archive. To learn more or volunteer, go to nationalmediaarchive.com.
This company is one that most people don't know about. But make no mistake, BlackRock owns more of the world than you can imagine. It controls nearly every major U.S. bank, every pharmaceutical giant, and practically all of the mainstream media. BlackRock oversees 10% of all stocks traded worldwide, which equates to an astronomical $10 trillion in assets. Yes, trillion. For perspective, BlackRock is worth half of America's total GDP. Their reach is so vast. The U.S. and China now rely on BlackRock to avoid recessions. The founder and CEO, Larry Fink, sits on the boards of the influential Council on Foreign Relations and the World Economic Forum. The man has more power than most government leaders. As Henry Kissinger once said, "Whoever controls the money controls the world." BlackRock is a living testament to that statement, holding unparalleled global influence. What's truly mind-blowing is that BlackRock pulled this off in just 34 years. Yet, despite its dominance, most people still don't know who BlackRock is. Why? Well, that's a question that will become clear as this story unfolds. Because once you understand the extent of BlackRock's control, the consequences of its reach start to sink in. Now, let's take a step back and look at how it all started. How did BlackRock go from a small investment firm to the financial juggernaut it is today? For that, we need to look at Larry Fink's rise to power. Larry Fink was born into a wealthy family in Los Angeles in 1952. But from an early age, he wasn't satisfied with just being wealthy. He was hungry for power. Fink's original path was politics, and he even earned a Bachelor of Arts degree in political science from the University of California, Los Angeles. But as time went on, Fink realized that politics wasn't the key to real influence. Money was. So he switched gears and turned to banking and real estate. While in college, Fink also became involved with the secretive Kappa Beta Phi, a group whose members included the likes of Michael Bloomberg and the chairman of Goldman Sachs. Fink took full advantage of his connections, which helped him land a job in the mortgage bond department at First Boston, a major New York-based investment bank. This is where Fink would truly make a name for himself in the world of finance. Over the course of his time at First Boston, he became one of the highest-paid employees, generating over $1 billion. He was unstoppable, and it looked like he was on the fast track to becoming the CEO. But success didn't come without a price. In 1986, Fink's risky trading practices caught up to him. He lost $100 million of the bank's money within just a few months. His reputation quickly crumbled, and he was banished from First Boston. To most, it seemed like the end of the road. But Fink wasn't about to give up that easily. Instead of letting the setback destroy him, he vowed to learn from it. He would make risk management and risk avoidance his new focus. He turned this failure into an opportunity to create something bigger. At 36, Fink teamed up with some of his former Kappa Beta Phi connections and founded BlackRock in 1988. It didn't take long for the firm to take off. By 1993, BlackRock had grown from a $5 million operation to over $8 billion in value. But not everything was smooth sailing. During this time, a power struggle broke out between Fink and one of the company's co-founders, Stephen Schwarzman. Fink, driven by his desire for more control, pressured Schwarzman to sell his stake in BlackRock for $250 million. That same stake would now be worth over $12 billion. Despite the infighting, Fink's path to domination was set. In the years that followed, BlackRock grew larger and larger. But the company's true moment of world-changing influence didn't come until the 2008 financial crash. And make no mistake, that crash didn't just change the economy. It cemented BlackRock's place as one of the most powerful entities on the planet. The 2008 crisis was the worst financial crash since the Great Depression. Markets were in free fall. Oil prices were plummeting, and the world was on the brink of recession. But Fink, having anticipated the crash, saw it as an opportunity. BlackRock's focus on asset management insulated it from the worst of the crisis. Fink had known for years that mortgage-backed securities were a ticking time bomb. And when that bomb went off, BlackRock was positioned to profit. In fact, Fink's connections to Treasury Secretary Timothy Geithner helped secure BlackRock a contract to manage the assets of several major banks that had collapsed during the crisis. While the rest of Wall Street floundered, BlackRock soared, establishing itself as the most powerful player in the financial world. However, Wall Street was just the beginning. Fink had much bigger ambitions. In the years that followed, BlackRock revolutionized the financial landscape with the introduction of exchange-traded funds, or ETFs. ETFs are a type of investment fund that pools money into companies in a specific industry, offering stability and solid returns. The new funds were wildly popular, and BlackRock became the largest player in the market, managing money for everyone, from the biggest banks to the smallest retirement funds. With its massive wealth, BlackRock began buying up stakes in virtually every major corporation on the stock market. If you look at the ownership structure of almost any major company, chances are BlackRock is there. As BlackRock grew, so did Fink's vision of a global economic empire. But this wasn't just about money. Fink saw the power of technology and knew that if BlackRock was to truly dominate, it needed to harness the full power of data. So, BlackRock poured massive amounts of money into building a supercomputer called Aladdin, which would analyze investments and manage over $20 trillion in assets. For context, that's more than the entire United States GDP. With Aladdin, BlackRock could predict the outcome of every single investment, ensuring it stayed one step ahead of its competitors. But it wasn't just about the money. BlackRock used its vast financial empire to influence global events, including the aftermath of the coronavirus pandemic. As governments turned to the Federal Reserve to help stabilize their economies, BlackRock became an indispensable partner, further solidifying its control over global financial markets. As of now, BlackRock owns stakes in nearly every major industry, from media companies to banks, oil companies, and even weapons manufacturers. Its influence is undeniable. BlackRock's power extends far beyond just financial markets. It controls culture, foreign policy, and even entire governments. This is a company that controls the world, often in ways you can't even see. The company isn't just reshaping the financial markets. It's actively shaping the very direction of society, and not necessarily for the better. One of BlackRock's more controversial moves was its push for social change, disguised as a call for corporate responsibility. In 2018, Larry Fink wrote an open letter urging companies under BlackRock's influence to contribute to society or risk losing his firm's support. The message was clear: businesses should serve a social purpose or face the consequences. On the surface, this might sound like a noble push for corporate responsibility. However, it's important to consider the motives behind this plea. Fink's focus on social purpose isn't just about making the world a better place. It's about controlling the narrative and pushing a certain agenda. Fink's letter laid the groundwork for what we now know as the Environmental, Social, and Governance (ESG) framework. ESG has become a rating system used by investors to assess companies based on their environmental impact, social policies, and corporate governance. Companies that score well on ESG are more likely to attract investment, while those with poor scores may struggle to secure funding. This system has rapidly become a key determinant of which companies thrive and which companies struggle. For companies like Nike or Coca-Cola, aligning themselves with popular political and social causes, such as advocating for carbon credits, diversity, or sustainability, boosts their ESG scores. This creates a situation where businesses feel the pressure to play the game and cater to the current cultural and political winds to improve their investment prospects. But there's a catch. This ESG rating system isn't about real change. It's about optics, image management, and corporate compliance with a set of social ideals. Critics argue that ESG scores are little more than a facade, a marketing tool used by corporations to appeal to investors while not necessarily making genuine progress towards social good. For example, companies may tout their green credentials by promising to reduce carbon emissions, but at the same time, they may be investing in or profiting from environmentally harmful industries. The ESG system forces businesses to prioritize social and political issues over the real needs of the consumer or the sustainability of their own operations. As more companies push for higher ESG scores, the focus becomes less about the quality of their products or services and more about fitting into a prescribed narrative. And BlackRock holds the keys to that narrative. But here's where it gets even more troubling. BlackRock's influence isn't just about controlling companies. It extends to governments and entire societies. Through its control over major banks, insurance companies, pension funds, and global corporations, BlackRock has the ability to sway public policy. In fact, BlackRock has lobbied for significant regulatory changes that directly benefit its financial interests. One example is BlackRock's involvement in the regulation of the banking sector in the European Union, a decision that raises serious ethical questions. How can BlackRock be trusted to regulate the banks when it owns substantial stakes in many of those same institutions? This conflict of interest is just one example of the blurred lines between public policy and corporate influence, a trend that has only grown stronger in recent years. Another significant concern is BlackRock's growing influence over housing markets. As mentioned earlier, BlackRock has been buying up residential real estate at an alarming rate, especially single-family homes. This has resulted in skyrocketing home prices, making it nearly impossible for regular people to afford homes. As more individuals are forced to rent, BlackRock benefits by collecting higher rent payments and generating profits from artificially inflated property values. This practice isn't just hurting potential homeowners. It's putting the entire housing market in jeopardy. BlackRock's actions, coupled with its growing control over the financial markets, create a cycle where everyday people are at the mercy of a company that has no interest in serving their needs. The impact of BlackRock's influence is far-reaching, touching every aspect of society. From shaping the media narrative to controlling financial markets, the company's reach is vast. But one of the most disturbing aspects of BlackRock's power is its growing ties to authoritarian regimes, particularly China. As BlackRock continues to increase its investments in Chinese companies, including those tied to the Chinese Communist Party, it's not just supporting a foreign market. It's indirectly empowering a regime that actively suppresses political dissent, violates human rights, and imposes draconian surveillance measures on its citizens. In 2020, BlackRock made headlines when it became the first foreign firm allowed to manage mutual funds in China. Since then, BlackRock has continued to increase its investments in Chinese companies, despite the country's track record of human rights abuses. By partnering with companies that have direct ties to the Chinese government, BlackRock is effectively aligning itself with one of the most authoritarian regimes in the world. This move is raising serious concerns about the potential for BlackRock to influence global politics in ways that benefit China's strategic interests, while undermining the democratic values that Western countries hold dear. BlackRock's involvement with China is not just a financial decision, it's a political one. The company's increasing investments in Chinese companies with ties to the government not only strengthen the Chinese economy, but also grant China greater influence over global affairs. This is an incredibly dangerous precedent, as it gives BlackRock, and by extension China, the power to shape global markets, control economic trends, and influence foreign policy decisions. And yet, despite all of this, BlackRock continues to fly under the radar. As the largest asset manager in the world, BlackRock's influence is undeniable, but its actions remain largely unexamined by the public. If people were to truly understand the scale of BlackRock's power and its ties to authoritarian regimes, the backlash could be severe. But BlackRock knows how to operate in the shadows, pulling the strings behind the scenes, making decisions that affect the global economy, politics, and society, all while staying largely invisible to the public eye. In a world where corporations like BlackRock control the flow of information, the direction of financial markets, and the future of global politics, it's clear that we're no longer living in a system that prioritizes the will of the people. Instead, we live in a world where powerful corporations call the shots, and where the balance of power is increasingly concentrated in the hands of a select few. If BlackRock continues on its current trajectory, the consequences for global democracy, free markets, and individual freedoms could be catastrophic. The world may have already entered an era where global power is no longer defined by nations or governments, but by massive corporations that control everything from media narratives to the fate of entire economies. The question now is, how far will BlackRock go in its quest for power, and what will it mean for the future of our societies? The more influence BlackRock has over the global economy and politics, the less control regular people have over their own lives. The company's ability to shape public policy, control the media narrative, and manipulate financial markets is reshaping society in ways that aren't immediately obvious, but are deeply concerning. The crux of BlackRock's influence is its ability to control vast amounts of capital, which it uses not just for financial gain, but to drive societal and political agendas. This isn't just about maximizing profit, it's about controlling the very systems that govern our world. BlackRock's ownership of major financial institutions, media conglomerates, and technology companies gives it an unprecedented ability to shape how society operates, who holds power, and who gets to decide what is true. Take, for example, BlackRock's power over the real estate market. The company's relentless buying spree of residential properties has significantly distorted housing markets across the globe. BlackRock's investment strategy, focused on purchasing large swaths of real estate, has contributed to skyrocketing home prices. This has made it nearly impossible for everyday people to purchase homes, forcing them to rent from corporate landlords like BlackRock. This not only diminishes the ability of average citizens to build wealth through property ownership, but it also consolidates power in the hands of a few, with BlackRock reaping the benefits. It's worth noting that this practice isn't just happening in the United States. BlackRock's influence extends globally, with the company buying up residential properties in countries all over the world. As more and more people are forced to rent, BlackRock gains an even greater foothold in the housing market, profiting from the growing demand for rental properties. The company's sheer size allows it to outbid individual buyers, effectively pricing them out of the market and securing its own position as one of the largest real estate owners in the world. But housing isn't the only area where BlackRock has a stranglehold on the global economy. The company's investments stretch across nearly every industry, including energy, finance, technology, and even defense. This gives BlackRock the power to shape not only the economic landscape, but also the political environment in which these industries operate. When BlackRock owns significant stakes in companies like ExxonMobil, Bank of America, Facebook, and Lockheed Martin, it can influence the policies and decisions of those companies, often to its benefit. This kind of control over so many industries is unprecedented, and it's raising serious questions about the future of democracy and capitalism. In theory, capitalism is supposed to be a system where businesses compete with one another, where market forces determine the direction of the economy. But in reality, companies like BlackRock are so big and powerful that they can distort market forces, eliminate competition, and dictate outcomes in ways that benefit them while leaving smaller players in the dust. One of the most alarming aspects of BlackRock's influence is the way it intertwines with government decision-making. By holding vast amounts of capital and controlling so much of the global economy, BlackRock has become too big to fail. This has led to a dangerous cycle where governments are increasingly reliant on BlackRock to manage their economies. From managing the Federal Reserve's investments during the 2008 financial crisis to overseeing the U.S. state government's response to the COVID-19 recession, BlackRock has become the go-to firm for crisis management. But this reliance also gives BlackRock the power to shape government policy in ways that align with its own interests. In fact, BlackRock's role in the COVID-19 economic response is particularly concerning. As governments around the world scrambled to stabilize their economies during the pandemic, BlackRock was given control over the Federal Reserve's $500 billion corporate bond buying program. This gave BlackRock the power to decide which companies would receive government-backed support. The fact that BlackRock has the ability to make these decisions that affect entire industries and millions of people, is a stark reminder of how deeply entrenched the company has become in the global financial system. The potential for conflicts of interest is huge here. BlackRock's dual role as both an investor and a major player in government policy makes it difficult to separate corporate interests from the public good. With so much power concentrated in the hands of one company, it's easy to see how BlackRock could use its influence to further its own agenda, even at the expense of regular citizens. Whether it's pushing for regulatory changes that benefit its investments or lobbying for policies that serve its bottom line, BlackRock is in a position to shape the future of global governance. What makes all of this even more troubling is the fact that BlackRock operates largely out of public view. Unlike government institutions, which are accountable to the people, BlackRock is a private entity, and its decisions are made behind closed doors. It is not subject to the same level of scrutiny as publicly elected officials, and yet it wields power that is just as great, if not greater. This lack of transparency allows BlackRock to operate without the checks and balances that exist in democratic systems, giving it an immense advantage in shaping the global political and economic landscape. But perhaps the most disturbing aspect of BlackRock's influence is the way it has aligned itself with authoritarian regimes. The company's increasing investments in China and its ties to Chinese companies with direct connections to the Chinese Communist Party have raised alarms about the potential for BlackRock to act as a tool for advancing China's geopolitical interests. BlackRock's investments in Chinese firms, many of which are involved in surveillance, censorship, and human rights violations, have led to concerns about how the company's actions could impact global freedom and democracy. For example, BlackRock's investment in Hikvision, a Chinese company that makes surveillance technology used by the Chinese government, has drawn widespread criticism. Hikvision's technology is used to monitor and control the population in China, particularly in regions like Xinjiang, where the government has been accused of committing atrocities against Uyghur Muslims. By investing in such companies, BlackRock is indirectly supporting a regime that opposes many of the democratic values held by Western societies. And by pouring billions of dollars into China, BlackRock is helping to fuel the rise of an authoritarian superpower that could challenge the West's global influence. The more BlackRock aligns itself with China and other authoritarian regimes, the more it threatens to reshape the world order. If BlackRock's growing investments in China and other authoritarian states continue, the company could become a key player in advancing the interests of these regimes, further consolidating power in the hands of a select few. This all points to one stark reality. We're living in a world where massive corporations like BlackRock are replacing governments as the true centers of power. As these corporations grow in influence, they're increasingly shaping the policies that govern our lives, often without our knowledge or consent. The result is a world where the lines between business and government are blurred, where the people have less and less control over the forces that shape their futures. So, as BlackRock continues to expand its reach and influence, the question remains, what kind of world will it create? A world where global corporations control everything, from the media we consume to the homes we live in, to the very policies that govern our countries? Or will we find a way to reclaim control before it's too late?